If you're making hundreds of offers and you're not getting any deal done, then you need to go back and see, okay, are you being too conservative on your rental value? Are you being too conservative on how much you can rent the property for, or how much is the rehab on this property, or how much is the value of this property? If reasonably you think you can rent the property for $1,000 a month, but you're being super conservative and you're estimating, oh, it's going to be worst case scenario, you cannot rent it for more than $500, $600, then you're not going to get anything done.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins.
Today's guest is shipped out to the West Coast, but still flipping houses, managing a 50-door portfolio in Northwest Indiana. So a great conversation on how he got started, where that came from, how he was able to do that. And he's sharing a lot of experience on what to do, what not to do. At one time was flipping more than 50 houses a year. He's still flipping. And he started this amazing company. So he's got a CRM system called Resimply. I'm excited to jump in and grab his experience and his knowledge, not only in the real estate world, but also in life on the way, making sure he's designing his life that he wants to live and not be stuck busy all the time. Everybody, please welcome real estate investor and the founder of Resimply, Sharad Mehta, to the show. All right, welcome to the show. Today, here we are in the evening. I'm on the East Coast. You're on the West Coast. Sharad, welcome to the show, man.
Hey, thank you, Brett, for having me. Yeah, my day is about halfway done. It's nice, beautiful outside. Not even one cloud. It's absolutely beautiful day.
Puts a smile on my face. I store these days up for the days when the clouds are out.
Yeah,
got a good day here, and like you're saying, you're on the West Coast, and already putting some questions into my mind on how you're managing your real estate virtually and how you're acquiring it. So lots to dig into here. But for the listeners, can you just give them a little summary about where you come from, where you're at, and what you're focusing on now?
Yeah, absolutely. So I started investing in August 2010. It's when I bought my first property. I was working as a full-time real estate investor. And, I was looking for some freedom of time and money, bought my first 2-unit in August 2010. Then I bought another 3-unit in September 2010. And I absolutely, was in love with cash flow. I'm like, okay, I got to do more of it. It just happened to be, I was living in Chicago back then. I bought these properties in Indiana. It was like perfect opportunity, right place, right time. And I left my job in March 2011 to just kind of like double down on it and buy as many rental properties as I could. So right now I own about 50 rental units. They're all, I shouldn't say all, like 95% of them are paid for free and clear. I've done about 750, 800 flips since then. And I own a property management company. And then I also own a real estate CRM company for investors.
Amazing. Congratulations on that journey. I'm sure it was some challenging times too there, but the way that you're sitting currently, not leveraged, cash flowing, is a wonderful place to be. How does it feel?
It feels good, man. It was very intentional from day one. I think I used to be an accountant, so I was really into personal finance. And then I got heavily influenced by Dave Ramsey. I don't know if you're familiar with him, but he's not everyone's cup of tea, but I just absolutely related to him. Again, I think it was coming from the background that I come from, grew up in India, very conservative when it comes to finances. And then when I started investing, this was right after the financial real estate market crashed because of over leverage. So I think all of that had a big influence, and following Dave Ramsey, all of that had a big influence on my investment strategy at that point.
Nice. So throughout that process, did you use leverage and then focus the
I
cash
did.
flow to pay the leverage off?
Exactly. That's exactly what I did. I was very intentional about the leverage that I was getting. So I connected with this private money lender. She, I think, financed like, I don't know, 15, 20 houses for me initially. And these were 2-year amortization, sorry, 7-year amortization, 2-year balloon loans that I had. So I was very focused on paying these back as quickly as I possibly could. So I forced myself in this situation where I had to pay these down like quickly. So I couldn't use the cash flow for anything other than paying these down. So I had like long-term goal in mind that I wanted to pay these down, so I could just kind of enjoy my life a little bit
There is
after
no
that.
cash flow on a 7-year amortization, though, is there?
There's, I mean, there was a little bit, like a few dollars there. Like you have to keep in mind, these are like 2010 properties in Indiana.
Right.
The first property I bought, I was all in for $35,000, including purchase and rehab. And I had, the units were rented for $1,200 total, $600 each. So I had some cash flow from that. The 3 unit, I was all in for about like 45, 50. They were renting for about $1,800. I mean, they've gone up in value a lot since then. So these were very high cash flowing properties. So even with, and I was using some of my own money. I wasn't getting like 100% loans. So I had a little bit of equity in these properties. So I was able to just whatever cash flow I had, I just like aggressively paying it down.
Right. No, that's really interesting. And in that piece, so you're working full time and you're doing this.
No, I left my job March
after
2011.
right. So
I had a 4-unit under contract when I decided to leave my job. Unfortunately, that 4-unit fell out of contract. But by that time, I'd already decided I was going to leave my job. It was honestly, it just seems like, coming from an accounting background, it just seems like too good of an opportunity to pass on.
Yeah.
My thought process was, okay, I'm going to leave my job. The absolute worst that happens is I give it my 2 years. I was still young back then. My wife and I, we didn't have any kids. And my wife had a really good job. My thought process was, okay, I go in with this for 2 years. And if I'm like absolutely the dumbest person in the world, the worst thing that happens is I lose 2 years of my life and I lose all the money that we have, but we're still young. I can go get this accounting job again and then restart. However, that's the absolute worst case, which I was prepared for. But the upside is how I'm thinking this will work out. If I'm even like 50% right, the upside is amazing. It's funny. My wife and I, we went for lunch this afternoon and we were just talking about it. And, I said, it's amazing the time that we decided to start the business. At the time that we did it just worked out. And that was the perfect time. We didn't have any kids. We had just gotten married. We didn't have any kids. We both had stable jobs. We didn't have a lot of expenses. Again, like influence of Dave Ramsey, living on lower of the two income and saving the higher income. So, it didn't impact our lifestyle. So it wasn't going to impact our lifestyle. We would deplete our savings investing into properties, but we were investing in assets, cash flowing, appreciating assets. So we felt pretty good about that. And then again, like just weighing the pros and cons, the upside, if it works out, it's going to be amazing. The downside, if it doesn't work out, we lose everything in a couple of years of my life, which is okay, not the end of the world, but we can restart.
And you were in Chicago when you first started and you were buying in Indiana. What market in Indiana were you?
Northwest Indiana. So I was living in downtown Chicago. The market that I was buying was right outside of Chicago. We weren't buying in Gary. I own one property in Gary actually, but these were East Chicago, Hammond, Maryville were the 3 primary cities we were buying in. We do a lot of flips in Gary now. That market has actually come up significantly. But initially when I started, we were not doing anything in Gary. Nothing. Yeah.
Interesting. So somewhat close, still a little bit out, but now you're out on the West Coast, completely away from that market. And that's still the target market that you're getting?
Exactly. Yeah. Just that's the only market that we invest in, nothing outside of Northwest Indiana. The entire population of the area that we invest in is like maybe 300,000, 400,000. We're in Lake County, but in few cities within Lake County. I think the total population of cities that were in maybe 200, 300,000 max.
Mhm. And when you first started, Sharad, how were you keeping your offers straight, your opportunities straight, your properties straight? Like what tools were you using to keep all of that together?
I was using Google Sheets, Excel, because I was an accountant, I just had like natural inclination towards spreadsheets. I think that's where, looking back, if I had thought a little bit longer term, like what systems and processes I would need, I would have added some efficiency in my business. But I think that's where I left a little bit money on the table, not having good systems and processes. And look at some of the other investors that are using Resimply and that are doing really, really well. They think about systems and processes very early on. I didn't think about it until I think like 3 or 4 years into investing. I was almost forced to think about it once I moved from Chicago to California, where I live now.
Hmm.
I was like 4 hour flight away, and that's when I really started looking at it. But offers, I was back in the day, initially, I was buying everything from MLS. This is like 2010, 11, 12 that we're talking about. There were like tons and tons of properties on MLS. You didn't really need to do any direct to seller marketing because you could just buy kind of properties you wanted from MLS. So the offer tracking, which is agent was doing that. I didn't really have to, manage that. We had an agent that we were working with. He was managing that. And then for contractors, we were managing everything on spreadsheets and stuff.
Interesting. And you mentioned Resimply there first. So we're going to talk about that a little bit. But on that front side, you mentioned systems and processes that you would like to put into place earlier on. What are some of those that come to mind first? Like if the listeners are out there and maybe have that duplex and a tri or a quad, and they're just starting to feel that how it feels to cash flow and be led properly. What are some systems, what are the first systems that pop into your mind that would be useful for the listeners?
I think at like minimum, I would say like know your numbers, like know your finances. If you're cash flowing, let's say on a duplex, $200 a month, is that $200 reasonable? Could you be cash flowing $300 by looking at your financials, seeing the usage of everything that you have? Are you paying the contractor reasonable? Could you save a little bit money on how much you're paying contractors? If you're using a property management company, I've been in these situations. Now I own my own property management company. Before that, so working at a different property management company, they would send me like an invoice. Hey, it costs $200. Like now I question, okay, is it $200 reasonable for, I don't know, like someone to come out and replace a toilet, for example, or should it be $100, for example? I understand property management companies would have a little bit of markup, but is it reasonable? Like look at those sort of things at a minimum. The first thing anyone and everyone should do is look at their financials of everything that they're doing in their business, whether you own rental properties or whether you own a fix and flip business, wholesaling business, whether you're apartment complexes. At a fundamental level, you need to look at your numbers and make decisions based on the numbers. That's what I would do. And then as you scale, depending on what kind of business you're on, like if you're, let's say, if you're a real estate investor that's buying a couple of properties directly from MLS, making offers through agent, you probably don't need a CRM. But if you are an active investor that are buying off-market properties, doing direct-to-seller marketing, even if your goal is to do like 1 or 2 deals a year, definitely invest in a CRM. I'm not here like promoting Resimply, but I'm just saying like this is something I see day in, day out. We have thousands of investors using our platform. The successful people are investing in systems. They have a process that they're following. They have something that they have committed to that day in. It's like, if let's say your goal is to lose weight, right? It doesn't matter. Like people could lose weight by going for a jog every day on the street, or they could go to a gym, they could go to F45, they could go whatever gym that they want to go to. But it's not that there is one right way to do that. It's not that, well, you have to go to like F45. I'm saying F45 because that's the gym I go to. You don't have to go to F45 to lose weight, right? You could go for a walk for 2 hours every day, eat healthy, you could lose weight. So you could get to the end result by following different path, but you have to stick to the path of doing it, committing to it day in, day out, and then just track that on a daily basis, weekly basis. Have a cadence of checking in. Let's say if you weigh 300 pounds and your goal is to get to 200 pounds by the end of the year, you want to weigh yourself in every week. You start at 300 pounds. You're going to the gym and you change your nutrition. Okay, did you lose weight? Did you go from 300 to 295, or you went from 300 to 305? Then you look at, okay, you say, okay, I'm going to the gym, but am I working out there? Am I just like sitting there and eating French fries and watching an NFL game?
Yeah.
Then you start looking into those things, right? It's you control the input of what you're doing day in, day out, and you almost like forget about the output, but you just check in on a weekly basis to make sure your input aligns with output, right? But it's the same thing with real estate investors. If you're making hundreds of offer and you're not getting any deal done, then you need to go back and see, okay, are you being too conservative on your rental value? Are you being too conservative on how much you can rent the property for, or how much is the rehab on this property, or how much is the value of this property? If reasonably you think you can rent the property for $1,000 a month, but you're being super conservative and you're estimating, it's going to be worst case scenario, you cannot rent it for more than $500, $600, then you're not going to get anything done because you're basing your numbers of $500. Or if a contractor comes out and gives you an estimate of, let's say 10,000, but again, you're being over conservative, you say it's going to cost at least 30,000. Then again, you're not getting that property because you're using the wrong input. So those are the things, again, going back, depending on what kind of investing you're doing. If you're buying a couple of properties, rental properties from MLS, then you need to be looking at your financials. And then if you're managing on your own, use a good property management software, right? If you have a property management company that's managing, make sure that you're reviewing their numbers, question them on any expenses that you see, ask them for pictures. Those are the things that suggest that you feel confident on everything that's coming in is the maximum you can get in. Everything that's going out is the maximum that, needs to go out. There's nothing, you could have saved. I mean, you could, instead of $1,000, you're not renting your property for $900. Okay. Instead of spending $500 on repairs, you're not spending $700 on repairs because you don't know how much it should be.
Yeah.
So those are the things I would start out with for someone who's starting out, just knowing the numbers, feeling confident. That's going to give you more confident going into the second, third, fourth property, just knowing the numbers.
Yeah. And that consistency of checking in and looking at the numbers.
It's the boring stuff.
Yeah. But it's like, we can go out and buy all these houses if we don't know what they're doing, if we don't have that transparency or the drive to understand, then I don't care about my money. Nobody else is going to care more about your money than you do. When you sit down and you look at your financials, especially having that accounting background, what are you using to compare and contrast, to see trends, to know that I'm at my gross income? Do I have all my things in there? What are you looking at? Delinquencies? So what are some of the ways that you're reviewing the financials every month? So when you sit down and say, I've got 50 doors here, do I know what my gross income should be? And are you looking at trailing 12? How are you keeping this, make sure that you keep in traction?
Yeah. So first thing is, if I have 50 doors, let's just say for this example that every door should rent out for $1,000, right? Based on what other similar units are rented for. So my potential rent every month should be $50,000. Okay. If I'm only, and let's say I have 100% occupancy, I'm only getting 40,000. Why am I not getting 50? Right. That means then I need to look at, okay, is that the maximum we can get? Am I comparing my properties to properties that are not direct comparable properties? The $1,000 per month rental properties, do they include utilities? And I'm not comparing apples to apples, right? So that's the first thing I need to look at. The money that's coming in, is that, the expectations that I have, are those fair and reasonable, right? If I'm expecting 50,000 a month in rent to come in, and I'm only getting 40 with 100% utility occupancy, where is the disconnect, right? And the second is, there is going to be some, as your rental portfolio grows, there's going to be some delinquency, right? There's going to be some vacancy. So that's about like 10%. So on a $50,000, I should get about $45,000 every month, factoring in delinquency, vacancy. And then you look at your expenses, how much your expenses should be, including property management, your repairs, your capital expenses. That should be about, 35 to 40, 45%, can go up to 50% depending on if it's a, high maintenance property. Then you look at that, see, is it higher than that? Is it lower than that? What has your average been? Maybe this month you had to spend, $10,000 on a roof, so your expenses went up. But look at the average over the last, 12 months and see if it's in line with what you should expect to see. And then just make sure that everything is in line. If you see an expense over $100 or $200, then, just question the property management company and ask them for more detail. Hey, well, what is it that we did at this property that it cost us $250? Right? Like those sort of things. Did someone just charge $250 to come out and change a furnace filter when it should have been like the tenant's responsibility? So you really need to know where the money is going out. If that's something you're not comfortable with, like hire, virtual assistant to just do that for you. Just pay them like $100, $200 a month just to spend a couple of hours going through your financials and just make sure that they highlight something, right? So the money that's coming in versus the money that's going out, both make sense. And then you just feel more confident going into the next one. It's like not much different from if you were creating a personal budget. Hey, I'm making $50,000 and I want to save $10,000. So I have $40,000 to spend. I just say this is after tax income. Okay, let's just budget out where the $40,000 need to go. And then you just look at, this is how much I have to spend. This is how much I'm spending. Is it in line or not?
And then the fun part of stabilization, when you're spending and making repairs and, your numbers are all over the place.
Yeah.
But once you're stabilized and you can look at those scenarios and understand, you hit some major points there. Knowing your gross income, understanding if that's close to where the market's at, your occupancy or your vacancy, your delinquency, your expense ratio, knowing, how your managers are performing based off of what you would expect to see in the industry, right? So I think
Exactly.
There's some great key takeaways right there. If you were speaking directly to the listeners here, Sharad, two scenarios. Maybe somebody who's just getting started in real estate. The listeners are going to be, physicians, whether in med school, whether, in residency or, attending wherever they're at and they want to get started. Do you have any suggestions for them? They don't have the time, but they may have the capital.
Yeah, I mean, that's a very interesting question because let's say if you are in medical profession, right? Just say you're a doctor, you're a physician. So you have good income coming in. So you're not challenged on the money side, you're challenged on the time side, right? You have more money than time available. So for someone like me who's doing this full time, I can go out and hunt for these deals when I'm doing direct to seller marketing because I have a team that does that for me. If I were a doctor, right, I would not have this opportunity to do this because then it's not my primary source of income. Or if it's my goal to have that primary source of income, that's different. But I just say as a physician or as a professional, my goal is that I love my job. I love what I'm doing. I'm happy with the income. I just have this, savings that I want to invest passively. So don't compare, your expectations of rate of return that you have versus an investor that's doing this full time. Because they have more time, more resources, more knowledge of the industry than you would have because, you're in a different profession. So if I'm getting 10% on my money, you're not going to be able to get 10%. I mean, you may be able to get 10%, but chances are you will not be able to get 10% because that's not where your focus is. So if you're starting out, there's a couple of ways to do this. One would be you buy a turnkey property, which that's, one of the things we do. And you could, there's like plenty of providers. Let's say you decide on a market that you want to invest. There's companies that sell cash flow properties where they have bought the properties, done all the repairs, and they're selling you a rented property. So just look at, does that make sense for you, right? As the rate of return that they are showing, does that make sense? And then again, when you're buying a property, the turnkey company is going to give you some financials based on best case scenario. Hey, this is rented for $1,000, right? Going back to the same example. This is rented for $1,000. property management expenses are 10%, let's say taxes and insurance another, 15%. So they don't include anything else. So they say, all right, your cash flow is going to be 750, after paying everything. But that's not true. There's going to be repairs. There's going to be maintenance, right? So add another 15-20% on top of that for vacancy, for repairs, for maintenance, right? And see if does that still make sense? If you're buying cash, if you're buying financing, does it still make sense to buy that property? And then again, look at if you see someone advertise a property for $1,000, is it really $1,000? Or if the market rent is $800, but they found this,
They bumped it up a little bit, didn't they, Sharad?
Yeah, exactly. Maybe they have some like separate deal going on with the tenant where it's not actually $1,000, it should be $800. But there's some deal that they have with the, for the first year, the tenant will pay $1,000 and there's something is included and whatnot. So question that, right? So look at the numbers. Just don't, buy the numbers that a company is selling you, right? So that's one way to do that. The other would be where you provide lending to other investors that are doing active fix and flip. That's what we see a lot of, medical professional, people that are in medical profession do, where they just want very passive. They vet out some investors that they want to work with. And what they're going to do is they're going to take, they have these savings, 100, 200, 300,000, however much they have. And they said, okay, investor Brett, I'm going to give you this $100,000. You give me 8-10% on this. I don't care what project you invest in. You just give me that. You pay me monthly interest. So you pay me after the project is done. And then you see kind of if that, fits what you are looking to do. Do you want to have, an asset that you want to own, real estate, or you just want like totally passive where you don't want to get involved? You just lend your money to an investor and let them do, let them do their thing and you just get passive. Or the third thing would be if you have a little bit of time where you actively look at properties that you want to buy. The best thing would be to connect with an agent in the area and see if they can help you buy a fixer-upper property, where you can add a little bit of value to the property, have a little bit equity built in, and then the agent can also open doors for you to connect with other contractors and other contacts that you need in your area to get you started with that.
Yeah, that's great advice. How about on the other end of the spectrum where it's 5, 10, 15 doors already in the portfolio? How do I scale? How do I get away from my profession per se and get to that point where I'm maybe a little closer to where you're at, Sharad?
In that case, I would say is like reinvest as much as you can. If you have a full-time job and then the money that you're getting from these rental properties, take all of that money and keep investing, like just really believe and put faith in the snowball effect, right? Let the power of the accumulation or whatever you call it, Einstein's eighth law or whatever it is, let's just compound, let the power of compound interest take place. I mean, that's how I got started. I didn't buy 50 units out of the gate, but I was very intentional about, this is where I want to be 2, 3, 5 years down the road. I mean, it's a different market. So instead of 2, 3 years, it might take someone 7, 10 years, but just stick with it. It's like the same thing, for someone to go from 250 pounds to 200 pounds is easier, but if you're going from 500 pounds to 200 pounds, you just need to have longer time horizon, right? You need to be more intentional, more diligent about what you're doing, right? The input that you control. So what I would say, all the money that you're getting from your cash flow, about 5, 10, 15 units, make sure you don't touch any of that. Set that aside for next property, right? Any money that you can save right now. So make a little bit of sacrifice in your life right now for the future, right? Do that. Just keep buying more and more properties and figure out what investment strategy you feel comfortable with. It's the rental properties, whether it's 1 to 4 units, whether it's bigger units, that's what you've done research on. Just go all in, do the research upfront that, hey, this is what I'm going to do. This is what I feel 100% confident with. And don't look at what other people are doing. Different people are going to get to financial freedom using different investment strategy. I may have gotten to that through buying rental properties. Someone else might get to that through buying, apartment complexes. Someone else might do that through only Section 8 housing. So there's different paths that you can take to get to the financial freedom for freedom of time and money. But just, I know what I'm comfortable with. I didn't want any leverage. That's my comfort level. I could have 150, 200 units, but I did not want that. I just wanted freedom of time and money as quickly as I could get. And then I feel happy with that because it gave me freedom to do other things in life. So just know that, take your money, keep reinvesting into more and more and more properties. And then more cash flow you get, the quickly you can save for the next property, and just keep doing more and more of that.
Yeah, absolutely. That's great advice as well, too. What's your sweet spot there in Northwest Indiana
Indiana.
as far as appraised value and, say, rental income?
Uh, the properties that we sell to other investors, we sell them at 1% rule, typically. So let's say if you're selling a property to an investor for 150,000, it would rent for $1,400 to $1,600 on average, like 1% of the property value in monthly rent. And then typically we're buying properties with appraised value, after repair value of anywhere from 150 to 250. That's kind of our sweet spot for the properties.
Yeah.
Some will be a little bit lower, some will be a little bit higher, but I would say 80, 90% of them would be 150 to 250 price point.
Beautiful, beautiful. Yep, like that as well too. And just want to touch on Resimply here just a little bit, because we mentioned it before as CRM. It's the client relationship management perspective. And
Right.
if we've got listeners, and I know I've had guests on the show where they are practicing physicians, they are practicing medicine, and they're still doing direct to seller, whether themselves or their partners, they're going direct to seller. What is it about Resimply that kind of changed the game for you and kind of put you in the SaaS world and develop this? Like, what sets that apart, and how could that help maybe some physicians that are listening?
Yeah, so for me, like I mentioned, when I moved in 2015, I moved from Chicago to San Diego area where I live now. And I started looking at my business and saw all the inefficiencies that I had. That's when I kind of started looking for a software tool. I didn't find anything that would be a good fit. So I ended up hiring like 2016 or 17. I ended up hiring a couple of developers to create something very specific for my need. And then it kind of grew from there. But it's a software built for investors that are looking to buy off-market properties, doing direct-to-seller marketing. If you're doing, if you're looking to buy like at least a couple of properties a year direct-to-seller, and you're spending more than, at least $5,000 to $1,000 a month on average on marketing, that's where it makes sense. If you're doing less than that, you probably can manage all of that through Google Sheets. I don't think you need a system for that. If your goal is to do a couple of off-market properties, that's where we add value. We help you systematize everything in your business, from managing the data. So if you're doing direct marketing, for example, direct mail marketing, you could manage all the data. You could do direct mail from our platform, or if you're doing cold calling, you can do that. If you need a website for your business, we offer that. So you can call, text, manage all your leads within the system. You can manage the offers that you're making, kind of what you're mentioning earlier. When you're doing direct to seller marketing, there's a lot of back and forth that you're doing with the seller on the offer that you're making, the appointment, and especially the biggest thing is the follow-ups. You want to automate the follow-ups. You may get a lead that says, I'm interested, but maybe not for another year. So then you want to have that on an automated follow-up. That's where we help. I would say that's like one of the main things that we help our investors with, is managing their business, taking care of the automated follow-up sequences, and then having one platform where they can manage their business from end to end.
Interesting. And one thing that stands out to me on the website here, resimply.com, and then /Sharad. So it's RESIMPLI.com/SHARAD. The birth of Resimply Innovation and Real Estate Technology. There's a little pictogram there, and there's an accounting system inside of that ecosystem. Well, tell us a little bit about that.
Yeah, so I was accountant, full-time accountant before I started flipping. And then I think that had influence on how I kind of thought about Resimply. So there were three things that were very important for me when I started the company. Was it had to be an all-in-one software for investors to use. Second, it had to be a super simple software to use. That's what the name Resimply. And then third was it had to be very data-driven. So we built the accounting feature built in. So if your audience is familiar with QuickBooks, You don't need QuickBooks. I don't use QuickBooks in my business. I manage all of my accounting, bookkeeping within Resimply. It does all your bookkeeping and accounting. And because of being able to do that, it gives you very, very deep insight into your business. So as you start doing direct to seller marketing, it's very important to know if I'm doing direct mail versus, let's say, if I'm doing online ads, Google ads, I want to know how much money am I spending on direct mail versus Google ads and how much money am I making, right? Let's say if
ROAS,
I'm not
return on ad spend.
exactly.
Yes.
That's what it comes down to, right? If you're doing direct mail, let's say you're spending $10,000 on direct mail, you're spending $10,000 on Google ads. So in combined, you spend $20,000. If you're not using something like Resimply, or if you're not tracking your KPIs, you may not know how much money you're spending on each. You make $20,000, you spend $20,000 and you make $100,000. You're like, hey, this is great. I spent $20,000 in marketing and I make $100,000. I should do more of it. But as you start looking deeper into how much am I spending on direct mail versus how much I'm spending on Google ads, you may realize that you're making $100,000, but all of that you're making from direct mail. So you don't even need to do Google ads in order to make that 100,000. So you're spending $10,000 on Google ads, which is making you zero money when you could just make, $10,000, or you can make $100,000 from your Google ads. I mean, from your direct mail. Or you may be spending $10,000 on Google ads and only making 10,000, right? So like, hey, I'm breaking even. Why am I spending money? I'd much rather make $90,000 by only spending 10,000 versus spend 20,000 and make 100,000, right? So then you start making your decision based on the numbers. Then it makes sense that the next time you're doing, let's say you want to scale your business, instead of $90,000, you want to do $200,000. You're just going to do more direct mail because that's the one that's making you money. So you do more direct mail. And then if you add another marketing channel, you compare it with, how much am I making my direct mail versus the new marketing channel that I add. Does it make sense to add another marketing channel, keep investing in it based on the data that you have? So you're not making numbers based on the hunch that you have. You're making decisions based on the actual data that you get in your business. Yeah. So that's what the accounting part of it helps you do.
That's awesome. That's awesome. Are you plugged in when you're pulling raw data into this system? Excuse me. Are you connected with Core Logic at all?
Core Logic for the accounting stuff?
No, sorry. I skipped back over to basically, let's see.
For the property data, like bedrooms, bathrooms?
Yeah.
We're not Core Logic, but another data provider.
Okay. Yeah, very interesting. So those relationships are fun, and I'm sure you had a blast building all those things out too, finalizing that, because there's so much information that you can...
There is so much. Yeah, there is so much. And I feel like it's it's not like you are, you're bidding. I'm just trying to it's not like you're creating something that's ever going to be finished. Like you're not going to get to a point where like, okay, this software is done. It doesn't need anything else. Everything I could have done to it, I'm done with it. There's always something you can tweak with it. There's always something you can add to it.
The pros and cons of customization is because you can always change it, and it just continues to continue.
Exactly.
It's always getting better too, probably.
Yeah, exactly. It's driven a lot based on the feedback that we get from our customers. So we're making changes based on, okay, let's do this because, this is where the direction of the business is going. And this is where our customers are, demanding from us.
Yeah. Yeah. Well, that's great, man. I love it. If the listeners wanted to check that out, they can find it at resimply.com/Sharad. Is there anything else? You do a lot of podcasts. You have your own podcast. What are some things that maybe you don't get to talk about on other podcasts? Is there anything that stands out to you that you would want to share with the listeners?
That's a great question, man. I think something that I don't get to talk about often is, and then people have this idea that, I own a software company. I do like 25, 30 flips a year. I own a property management company. I own rental properties, that my day must be super hectic, just like working 10, 12 hours a day. It's not. Like I have a very easy day. Like I go work out pretty much every day. I play pickleball, 4 or 5 times a week. But I've added systems in my business, like made it where, okay, at this time I need to do this. and I'm going to honor and respect that time. For the most part, I'm not always that disciplined, but it's just having simple life or just doing things in a very simple way, but being very effective. You don't have to be busy to see results. You could just, the most important thing is to be consistent, right? Just going by, I love using the example of like going to a gym, right? You're not gonna, let's say if my goal is to lose 5 pounds in 30 days, right? I'm gonna go to the gym every single day or like 4 or 5 times a week, eat healthy for 30 days. And if I'm doing that, if I'm being consistent, I should lose that. It's not gonna happen if I spend the whole day in the gym, if my goal is to do it in one day and I just say, all right, I'm going to work out for 24 hours, I'm going to lose 5 pounds. It's not going to happen, right? You have to look at, all right, this is where I'm going to go. This is my end result. And this is how I'm going to get there. And then just be consistent. Like just do the boring stuff day in, day out, and just be disciplined. That's how at least I've gotten results in my life. It's just by being disciplined and just, being okay with doing boring things day in, day out.
Yeah. Consistency. I just actually had a note here in front of me too. If you want something you've never had, you must be willing to do something you've never done. And that piece of whether it's working out, whether it's taking this venture into real estate or scaling up a little bit in real estate. And remember that you don't have to do it the way that anybody else is doing it. I love your path, Sharad, where you've built this simple approach, living by design, being happy. You don't have to be busy to be efficient. So it's just, or effective, I think maybe the better word. It's just creating that path, staying focused, being consistent, having faith that it's going to work is a big piece.
Yeah, exactly. Yeah, if you know that, hey, if I go to the gym every single day and I eat healthy, I'm going to lose weight. There's like no other way. Or if, let's say I live in San Diego and I want to drive up to San Francisco, I go sit in my car and I start driving north. I'm going to get there if I keep driving. Some other people may have gotten there in their fancy car in like 5 hours, but I don't have to do that. I'm okay getting there in 10 hours, but I'm just going to keep driving. If I don't get there in 10 hours, am I going north or did I make a turn and I'm going actually east? So that's what you got to just keep aligning, is just going in the right direction and then just keep moving every day, every hour, every minute in that right direction. And then you'll get there. It's just a matter of time. Some people may do it faster than you. You may do it faster than other people, but you have to be comfortable with the pace that you're going at. Everybody is going to go in the same direction. If they want to go from San Diego to San Francisco, they're going to go north. Some people may want to do it faster. Some people may want to do it slower. Some people may want to take a flight. Some people may want to take a train. Some people may want to ride a bike. That's whatever, makes each individual happy, but they all have to move in the right direction, right? Yeah. That's what it's all about.
Well, I'm happy that your journey has brought you here to the Real Estate Mogul MD. I appreciate your time, Sharad, and your experience. Looking forward to staying connected with you. And if there's anything that we can do here, or if the listeners have anything they want to reach out and connect to you on, that's our Resimply.com is a way that they can connect with you. So thank you again for your time, Sharad.
Thank you so much for having me, man. I really enjoyed the conversation.
Awesome.
Some great questions.
Thank you. Thank you so much. And to the listeners out there today, remember, there's so much that was huge here. And when I get to ask these questions, I love basing them off my experience in my life. So hopefully it's brought you some value. And Sharad has shared his experience between his life experience as well, too. So check out Resimply. If it's something that you have any questions about, you can reach him. You can also reach us at physicianwealthsystems.com. Don't hesitate to shoot us an email if you have any questions, or if you want to be a guest or know anybody that should be a guest on here. We love having everybody's input as well, too. So until next time, thank you for your attention. This is Real Estate Mogul MD.